Have you ever wondered what would happen if your main source of income suddenly disappeared tomorrow? No paycheck, no salary, no guaranteed money arriving every 2 weeks. How long could you continue paying your rent, mortgage, car payment, groceries, insurance, and other bills? For some people, the answer is 6 months. For others, it is only a few weeks. And this is the uncomfortable reality of modern financial life. Most people depend on one income source for almost everything. They work one job, receive one paycheck, and use that paycheck to support their entire life. But the problem is not simply having one job. The real problem is having only one source of money, while your expenses continue to increase every year. Today, we are going to talk about how ordinary people can begin building multiple income streams, how wealthy people think about income, why passive income is often misunderstood, and how you can slowly move from depending entirely on one paycheck to building a financial system that gives you more control over your future. I'm Addy, and this is Wealth Theory. Keep learning, keep investing, keep building your future. Let's begin with the most important idea. You do not need 5 income streams tomorrow. You do not need to become an entrepreneur overnight. You do not need to quit your job. And you definitely do not need to chase every online opportunity that promises to make you rich quickly. Building multiple income streams is not about doing everything. It is about slowly reducing your financial dependence on only one source of income. Imagine a table with only one leg. It may stand for a while, but it is not very stable. If something happens to that one leg, the entire table falls. Now imagine a table with several strong legs. Even if one leg becomes weaker, the table may still remain stable. Your financial life works in a similar way. Your salary can be one leg, your investments can become another. A side business can become another. Freelance work can become another. Digital products, royalties, rental income, or other assets can create additional support. The goal is not to make your life more complicated. The goal is to make your financial future more resilient. The first income stream for most people is active income. This is the money you earn by directly trading your time and skills for money. A job is the most common example. You work a certain number of hours, perform certain responsibilities, and receive a salary or hourly income. Active income is extremely important. In fact, for most people, it is the foundation of wealth building. Your job can provide the money you use to pay your bills, build an emergency fund, pay off debt, and invest for the future. But active income has one major limitation. Your time is limited. There are only 24 hours in a day. You can only work so many hours before your health, energy, and personal life begin to suffer. This means that if your only way to earn more money is to work more hours, eventually you reach a limit. This is why one of the most important financial goals should be increasing the value of your time. You can do this by developing valuable skills. The market does not pay everyone equally for the same amount of time. One person may earn $20 per hour. Another may earn $100 per hour. Another may earn thousands of dollars for solving a specific problem. The difference is often not simply how hard they work. It is the value and scarcity of the skill they provide. This is why learning skills can be one of the highest return investments you make. Skills such as software development, cybersecurity, data analysis, digital marketing, sales, financial analysis, copywriting, video production, design, consulting, and specialized technical skills can create opportunities for higher income. The first question you should ask yourself is not, how can I make money quickly? A better question is, what valuable problem can I learn to solve? Because income usually follows value. If you can help a business get more customers, save money, reduce risk, improve efficiency, or create something valuable, your skill can become an income-producing asset. And unlike physical possessions, a skill can stay with you. Your car can lose value, your phone can become outdated, your clothes can go out of fashion. But a valuable skill can continue creating opportunities for years. This brings us to the second income stream, freelance income. Freelancing is simply offering your skills directly to clients, instead of depending entirely on one employer. A person may work a full-time job during the day and use their skills to serve clients in the evening or on weekends. A designer can create logos. A video editor can edit content. A writer can create articles or scripts. A programmer can build websites. A marketer can help businesses attract customers. A consultant can help companies solve problems. The important thing is that freelancing allows you to convert a skill into an additional income stream. But there is a major mistake many people make. They try to offer everything to everyone. They say, I can do graphic design, video editing, social media, websites, writing, marketing, and business consulting. This may sound impressive, but it can actually make it harder for people to understand why they should hire you. A better strategy is to become known for solving a specific problem. For example, instead of saying, I do marketing, you could focus on helping local businesses create social media content. Instead of saying, I do video editing, you could focus on editing short-form videos for financial creators or real estate professionals. The more specific the problem you solve, the easier it becomes for the right people to recognize your value. You do not need thousands of clients. You may only need a few good clients who value your work, and as your experience grows, you can increase your rates. This is how a skill can slowly become a second income stream. The third income stream is business income. A business does not necessarily mean opening a large company, renting an office, hiring employees, and investing a huge amount of money. A business can begin very small. A person may sell a service. They may create a product. They may solve a problem for a specific group of customers. The internet has made it possible for one person to reach customers across different cities, states, and even countries. But the key is to understand that a business is not simply an idea. A business exists when someone is willing to pay for a solution. This is why many people fail. They ask, what business should I start? A better question is, what problem are people already willing to pay to solve? People pay for convenience. They pay to save time. They pay to avoid stress. They pay to improve their appearance. They pay to make more money. They pay to become healthier. They pay to learn. They pay for entertainment. They pay for security. They pay for better experiences. When you understand what people value, you can begin identifying business opportunities. The fourth income stream is investment income. This is where your money begins working for you. Investing can include assets such as stocks, bonds, funds, real estate, or other investments depending on your goals and risk tolerance. But investing should not be confused with gambling. Many people see a stock rise dramatically and think investing is about finding the next big winner. That mindset can lead to dangerous decisions. Long-term investing is usually about consistency, diversification, patience, and understanding risk. The goal is not to predict every market movement. The goal is to build ownership in assets that may grow or produce income over time. One of the most powerful ideas in investing is that you can earn money from your labor, but you can also earn money from ownership. When you work for an employer, you earn money through your time and skills. When you own an asset, that asset may produce value while you are doing something else. This is one reason ownership is so important in wealth building. A person may spend years working for money, but eventually, the goal should be to have some money working for them. This does not mean you stop working. It means your future does not depend entirely on your next paycheck. Now let's talk about one of the most misunderstood concepts in finance: passive income. The internet often makes passive income sound easy. People say, build one product and make money while you sleep. But the truth is that most passive income requires active effort before it becomes passive. A rental property may generate income, but it requires capital, maintenance, management, insurance, and risk. A digital product may continue selling after it is created, but creating the product may require months of research and work. A YouTube channel may eventually generate advertising revenue, but building an audience requires consistent effort. An investment portfolio may generate dividends or growth, but building the portfolio requires saving and investing money. Passive income is usually not money from doing nothing. It is often money from work you did earlier, money you invested earlier, or assets you built earlier. This is an important distinction. If someone promises you effortless income with no risk, no skill, and no work, be extremely careful. The easiest way to lose money is to believe that making money is easy. Now let's talk about digital income. The digital economy has created new opportunities for individuals to create income-producing assets. A person can create educational content. They can build a newsletter. They can sell digital templates. They can create online courses. They can publish books. They can build software. They can create a media brand. They can develop a YouTube channel. The advantage of digital assets is that they can potentially reach many people without requiring you to repeat the exact same work every time. For example, if you spend months creating a useful digital product, the product may be sold repeatedly. But again, the difficult part is usually not creating something. The difficult part is getting attention. In today's economy, attention has value. If you can create useful content, educate people, entertain people, or solve problems, you can build an audience. And an audience can create multiple opportunities. But there is a difference between attention and trust. You can get millions of views and still make very little money. You can also have a smaller audience that trusts you deeply and creates significant opportunities. This is why quality and trust matter. People do not simply buy information. They buy clarity. They buy convenience, they buy solutions, they buy confidence, they buy results. The question is not, how many followers do I have? The better question is, can I genuinely help the people who follow me? Now let's talk about real estate. Real estate is another commonly discussed income stream. Rental properties can potentially generate rental income and may increase in value over time. But real estate is not automatically a guaranteed path to wealth. It requires careful analysis. You need to consider the purchase price, financing costs, taxes, insurance, repairs, vacancies, property management, and local market conditions. Many people only look at the rent. But rent is not the same as profit. A property may generate $2,000 in monthly rent, but after expenses, debt payments, maintenance, taxes, and other costs, the actual cash flow may be much lower. This is why successful investors look at the numbers instead of simply following excitement. The same principle applies to every income stream. Revenue is not profit. Followers are not customers. A high salary is not wealth. A large business is not automatically a profitable business, and a high return is not automatically a good investment. You need to understand what remains after the costs and risks are considered. Now let's discuss one of the most powerful ways to build multiple income streams, combining them. Imagine someone has a valuable skill. They use that skill to earn a salary. Then they freelance using the same skill. Then they create educational content about that skill. Then they create a digital product. Then they invest a portion of their income. One skill can create multiple income streams. This is extremely powerful. You do not always need 5 completely different careers. You can build a financial ecosystem around one area of expertise. For example, imagine someone who understands photography. They can work for a company. They can freelance for clients. They can sell photography presets. They can teach photography online. They can create content about photography. They can sell digital courses. They can invest their profits. One skill can become multiple assets. This is called leverage. Leverage means using something you already have to create more value. Your skill can create income. Your income can create investments. Your investments can create growth. Your experience can create content. Your content can create an audience. Your audience can create business opportunities. This is how different parts of your financial life can begin supporting each other. But there is a warning. Do not try to build too many income streams at the same time. This is one of the biggest mistakes beginners make. They watch videos about 10 different ways to make money and try to start all of them at once. They start a YouTube channel. They start dropshipping. They start trading. They start freelancing. They start a podcast. They buy cryptocurrency. They begin real estate research. And after a few months, they are exhausted and have not built anything meaningful. Focus is a financial advantage. Choose one primary income stream. Then build one additional income stream. Give it time. Learn what works. Improve your skills. Only expand when the foundation is strong. The goal is not to collect income streams. The goal is to build income streams that actually work. Now let's talk about taxes. As your income becomes more complex, understanding taxes becomes increasingly important. Different types of income may be treated differently depending on your location and situation. Employment income, business income, investment income, and property income can have different tax implications. This is why earning more money is only part of the equation. You also need to understand how much you actually keep. A person earning more but keeping less may not be financially better off than someone earning less but managing their money more efficiently. This does not mean you should try to avoid taxes illegally. It means you should understand the rules and plan responsibly. Many people ignore taxes until tax season arrives. But financially organized people think about taxes throughout the year. They keep records. They understand their income. They track expenses related to legitimate business activities. And when necessary, they seek professional advice. Financial education becomes more valuable as your financial life becomes more complicated. Now let's talk about the relationship between income and expenses. Many people focus entirely on earning more. But if every increase in income creates an equal increase in spending, your financial position may not improve. Imagine someone receives a $1,000 monthly raise. Instead of saving or investing part of the raise, they upgrade their apartment, buy a more expensive car, eat at more expensive restaurants, and increase their subscriptions. A year later, they earn more money but feel exactly as financially stressed as before. This is why the most powerful strategy is often to increase income while controlling lifestyle inflation. You do not need to live like you are poor. You simply need to avoid turning every raise into a permanent obligation. A raise can give you more freedom, but only if you keep some of it. This is where your savings rate becomes important. Your savings rate is the percentage of your income that you save and invest. A person earning $50,000 and saving 20% may be financially stronger than a person earning $100,000 and saving nothing. Income matters, but what you keep and what you do with it matters too. Now let's talk about emergency funds. Before aggressively chasing additional income streams, you need a financial foundation. An emergency fund can protect you from unexpected events. Job loss, medical expenses, major repairs, family emergencies, unexpected travel. Without savings, a sudden problem can force you to use expensive debt. This is why building an emergency fund is not boring. It is freedom. When you have savings, you have more time to make good decisions. You do not have to accept the first opportunity out of desperation. You do not have to borrow money immediately when something goes wrong. You have breathing room, and breathing room is valuable. Now let's discuss the biggest enemy of multiple income streams, distraction. Every week there is a new opportunity, a new business model, a new investment, a new platform, a new trend. A new way to make money, but not every opportunity deserves your attention. You must learn to ask, does this fit my long-term strategy? If your goal is to become a skilled freelancer, spending every week researching a completely different business may slow you down. If your goal is to build a long-term investment portfolio, constantly jumping between speculative investments may increase your risk. If your goal is to build a content business, changing your topic every few weeks may prevent you from building an audience. Consistency is difficult because it is not exciting. But consistency is often where the results come from. The people who build wealth are not always the people who discover the most opportunities. They are often the people who can stay focused on a good opportunity long enough for it to grow. Now let's create a simple roadmap. Step 1. Protect your financial foundation. Understand your expenses. Build emergency savings. Control high-interest debt. Step 2. Increase your primary income. Develop skills. Ask for better opportunities. Improve your value in the market. Step 3. Create one additional income stream. Choose something connected to your skills, interests, or experience. Step 4. Use additional income intelligently. Do not immediately increase your lifestyle. Use some of the money to build savings, pay down debt, or invest. Step 5. Build assets. Invest in things that may produce future value. Step 6. Continue learning. The financial world changes. Your skills should continue changing too. This process may take years, and that is okay. The goal is not to become financially independent in 30 days. The goal is to become financially stronger every year. Your first additional income stream may only produce $100 per month. That may not seem impressive, but $100 per month is $1,200 per year. More importantly, it proves something. It proves that you can create income outside your primary paycheck. Then perhaps it grows to $500 per month. Then $1,000. The amount matters, but the system matters even more. You are building the ability to create value in different ways. And that ability can become extremely valuable over time. Now imagine your financial life 5 years from now. You have a stronger primary income. You have an additional skill that produces money. You have investments growing in the background. You have fewer high-interest debts. You have emergency savings. You have learned more about taxes and financial planning. You may still have problems. Everyone does, but you are no longer completely dependent on one paycheck. That is progress. Financial freedom does not always begin with becoming rich. Sometimes it begins with reducing dependence. Every dollar of debt you eliminate reduces dependence. Every dollar you save increases flexibility. Every skill you learn increases opportunity. Every asset you build creates potential future value. Every income stream you develop gives you another option, and options are what financial freedom is really about. Money is not just about buying things. Money is about choices. The choice to leave a toxic job, the choice to take time off, the choice to move to a different city, the choice to start a business, the choice to help your family, the choice to handle an emergency without panic, the choice to say no. And the more of your financial life depends on one paycheck, the fewer choices you may have. This is why building multiple income streams is not simply a strategy for becoming rich. It is a strategy for building resilience. But remember this. Multiple income streams do not mean multiple sources of stress. If you build 5 income streams that require all your time, you may have more money but less freedom. The goal is to eventually create systems and assets that give you more flexibility. That requires patience. It requires learning. It requires choosing wisely, and it requires avoiding scams. There is no guaranteed shortcut. If someone promises guaranteed high returns, effortless passive income, or instant wealth with no risk, be skeptical. Real wealth usually grows slower than advertisements suggest, but slow wealth is often more sustainable than fast money. You do not need to chase every opportunity. You need to build a strong financial foundation and improve it over time. Start with your skills, increase your earning power, create one additional income stream, save a portion, invest responsibly. Protect your downside. Repeat, this may sound simple, but simple strategies can be extremely powerful when followed consistently. The biggest mistake is waiting for the perfect moment. You may think, I will start when I have more money. But starting is how you learn. You may think, I will start when I know more. But learning happens through action. You may think, I need a perfect business idea. But many successful businesses began by solving one small problem for one group of people. Start small. Start intelligently. Start with what you already know. Your first income stream outside your job does not need to replace your salary. It simply needs to exist. Once you prove that you can create additional income, you can improve the system. The first goal is not to escape your job. The first goal is to create options. And over time, those options can become freedom. So let's return to the central question. What would happen if your main income disappeared tomorrow? Would you panic immediately? Or would you have savings, skills, investments, and additional income that could help you continue moving forward? You cannot control every event in life. You cannot guarantee that your job will always exist. You cannot guarantee that the economy will always be strong. You cannot guarantee that your business will never fail. But you can prepare. You can build skills, you can save money, you can invest responsibly, you can create additional sources of income, you can reduce unnecessary debt. You can build a financial system that is stronger than a single paycheck. And that is the real goal, not to work 20 different jobs, not to chase every trend, not to become obsessed with money, but to build a life where your financial future does not depend on one fragile source. Because the strongest financial position is not always the person who earns the most. It is often the person who has the most options. Options to earn, options to save, options to invest, options to adapt, options to wait, options to say no. And those options are built over time. One skill, one decision, one saved dollar, one investment, one client, one asset, one additional income stream at a time. So if you want to begin today, start with these 3 questions. What valuable skill can I improve over the next 12 months? What problem can I solve for someone else? And what can I build today that may continue creating value in the future? You do not need to answer all 3 perfectly. You simply need to begin thinking differently, because your income is not only the money you receive. Your income is also connected to your skills, your assets, your decisions, your network, and your ability to create value. The more valuable you become, the more opportunities you may create. And the more assets you build, the less your future depends entirely on your time. That is the journey from earning money to building wealth. First, you work for money. Then you learn to manage money. Then you use money to build assets. And eventually, those assets can begin creating more options for you. It does not happen overnight. But it can happen step by step. And the earlier you begin, the more time you give yourself to learn, improve, and grow. So remember this, one paycheck can support your life. But multiple income streams can strengthen your future. You do not need to build them all today. Choose one, build it patiently, learn from it, improve it. Then, when the foundation is strong, build the next one. Because wealth is rarely created by one lucky moment. It is created by consistently building systems that make your financial life stronger. I'm Addy, and this is Wealth Theory. Keep learning, keep investing, keep building your future. And remember, the goal is not to work forever just to survive. The goal is to build enough skills, savings, assets, and income sources that your future gives you more choices than your present. I'll see you in the next video.